What's up, guys? Welcome back to the channel. Today, a new episode in the Work on Wednesday series. So let's get started. All right, so hopefully you took some action on last week's episode, and hopefully you took the time to write down your entire strategy. If not, start by doing that now because it's so crucial. And today's work totally lines up with what I spoke about last week. Now, today's question is, do you know exactly what you're looking for in the markets? And you need to know that in order to write down your strategy. So if you skipped last week's video, go back after today's video because you need to know exactly what you're looking for in the markets. And if we open up a chart, I'm going to do what most people do. They open up a chart and they're like, all right, level here. Oh, we have a level here. We have a level here. We have a level here. And don't get me wrong, it's nice to highlight which areas you think are key to the markets. And like I said before, trading is usually done at areas. So you have an area where you want to be trading at, and you have a setup, or you have a bias and you have a setup. That's usually how most people trade. That's usually how most strategies work. Now, the thing is, everyone can draw lines on a chart, and it doesn't make you a profitable trader. Even a kid can draw some lines at key swing highs and key swing lows. Oh yeah, we have two touches. That's what a kid thinks. Oh, we have another one here that's quite significant. And everyone can draw lines, but it's all about the execution of a strategy in live markets. That's what makes the difference. It's not the drawing lines. It's not the fancy trend line and the equal highs that you mark out. It's what you do with the information that you built into a strategy and then that you execute without making mistakes time and time again. So that's what trading is all about. And now, do you know exactly what you're looking for? And I mean that by where do you want to be trading? And Tom Dante, a great trader that I learned a lot from, he asks his students basically, do you know where you're looking to trade, when you're looking to trade, and what you want to see at those particular areas? So let's dive into those three. So first of all, where do you want to trade? Do you take every setup you get, or do you take them at key levels? Something you have to ask yourself. I take both. I take a setup I get in the middle of nowhere, but I also take him if they happen at key levels and they tend to work better. So I increase my risk at those areas. But ask yourself that question, where are you going to be trading? Then the next thing is, when are you going to be trading? If you are a day trader, are you going to be trading during the Asian session when it's ranging, or do you want the momentum of London and the US session? This can make a big difference, especially for day traders. And if you are a day trader, you really want to have a journal, and you want to journal in which session you took your trade, because there can be massive differences in terms of performance if you took it in the US session or in the overnight session, the Asian session. So that's what you want to think about. When do you want to be trading? Now, I'm a swing trader, so I don't care. I use the daily time frame. So I don't care about time at all. I just wait for my setup and that's it. Now, the other thing is, what do you want to see when you're trading? So let's say price moved up to your key level. It is the London session, and that's the session you want to be trading at. What do you want to see happening at your key level? That has to be very clear. You have to have a clear entry setup that you want to use when you're entering. What I want to see there is a small range, a probe above this key level and above the range, and then a break of structure to the downside. That's what I want to see. I'm very clear on that. I know exactly what I want to see. I know when I want to see it, because that doesn't matter to me. I know where I want to see it. You have to be that clear, guys. And if you are that clear, it's going to give you a few things. Number one, clarity. You're not sitting behind the screen and waiting and, maybe this is a setup. No, you know exactly what you want to see. And it makes sure you're calm. You're trading in a calm way. You're not rushed. You're not stressed. You know what you're looking for. You're waiting. And if it doesn't happen, it doesn't happen. And if it does happen, you know what to do. You enter your trade. You know where your stop goes. You know where your target goes. And that's so important. And another thing it's going to give you is it's way easier to backtest and journal. Because let's face it, most people think they lose money because of psychological issues, but it's usually because they haven't tested their strategy. And they just assume it works for some weird reason, probably because someone told them they make a lot of money with it while they don't. So it makes it easier to backtest if you know exactly what you're looking for. Backtesting for me, I really enjoy it. And it's an easy process for me because I'm so clear on what I want to see. If you know exactly what you want to see, you can just hop on a simulator, backtest, and you can get the statistics, and it's way, way easier. And a lot of people skip backtesting because they think it's useless and because they think it takes too much time. But usually it takes too much time because they're not clear on their strategy. And if you have to, every setup you have to hesitate, is this a real setup or not? I'm not sure. Should I take it? Yes or no? Yes, then it's very draining. Then it takes a lot of time. But if you just have your rules, rule number 1, 2, and 3, and they all check out, then it's very easy. You check, all right, number 1, yes. Number 2, yes. Number 3, yes. Okay, I take a trade, stop goes here. I'm entering here, and this is my target. You will turn on the simulator, target hit. Okay, you fill in your Excel sheet what happened, the outcome, etc. And then you're on to the next trade. It makes it so much easier to backtest, guys. And backtesting is, in my opinion, still crucial because you cannot trust anyone in this industry. And the other thing is, if someone tells you they're profitable with a certain strategy, and they really are, that doesn't mean you are going to be profitable with it. You still need to do the testing, and the more clear you are on your strategy and what you want to see, where you want to see it, and when you want to see it, the easier it is to backtest. So that's today's work. So let's go back to the sheet. This question, ask it to yourself and answer it for yourself. Do you know exactly what you're looking for in the markets? Do you have your setup written down? And that lines up with last week. But I really, really, really want you to think about your setup and write down in clean rules what it is, what you want to see, what areas you want to be trading at, because that makes it so much easier to prevent impulsive trading mistakes. I know a guy that was so good at trading, but he didn't have it written down. And then once he was in a bad headspace, he just started impulsively trading. But if he had everything written down, and if we had to tick boxes of rules for every trade he was going to take, he would quickly notice that the trades weren't in his plan and it wouldn't blow up. So take your time to do this. If you have any questions, comment down below. And yeah, then I'll see you in the next video. Hopefully you take action on this, because this is a game changer. Thanks for watching, guys. See you in the next video.